And that means we are live here on YouTube, Tackle Trading's Halftime Report. We've got Cody, got myself, Coach Tim, and we've got a very, very special guest, the meme master himself. Cody, Adam just had us rolling on the floor for a couple of weeks now, just with the GIFs and the memes on Twitter alone. Adam Stewart, Halftime Crew here. Adam, how are you, sir?
Doing great. Glad to be here in person.
Now, before we go live and discuss the market, because both of you guys are very political and you're very informed and well-read and whatnot, we had the State of the Union address last night with President Trump. What was your first reaction and takeaway? Cody, I know you're a very loyal supporter of our president. So what was your takeaway from the event?
My takeaway was actually that he did a good job of not being too Trumpian. He stuck to teleprompter. You could tell when he was kind of going on and off it, and his speech was a very good middle of the road. Here's what things are. Here's how things can get better. A couple partisan stuff, towards the middle end, but I mean, that's to be expected. But I think, and the polls kind of show this, overall, people really like the speech. I believe the polls I've been seeing is 76% approval rating over or positive message on his speech. And that's bipartisan poll. So I think the speech has some good takeaways from it.
Now, give me a quick confirmation here, Cody. Are we still streaming on YouTube? Because my screen froze over on this side. Adam, I know that you are my libertarian brother, more on the neutral side, third party, potentially even. I think you're willing to be more of an open-minded political person and go with whatever is the most logical and sensible to you. Now, what was your reaction to the State of the Union?
I thought he said some good things. I felt like, pulling us out of, wars that have been going on for a long, long time, that don't really seem to have an end in sight or a good thing. Some things I don't agree with, obviously, from a libertarian standpoint, is bigger government and more spending. So I would love to have seen him address our national debt and deficit. But overall, he didn't burn the building down and he didn't crash the markets today. So I think there were some positive things that came out of it.
So life is good. I'm seeing that we're still live, but it looks like we're skippy and kind of wonky. I'm trying to see.
Yeah, I agree. Why don't we do this? Why don't we do a screen share and see if that works out a little bit better? There might be an issue with Zoom.
All right. You'll see my screen now.
Gotcha.
We're in the vortex here, seeing a screen on the screen. Let's go over there.
And bring up Thinkorswim.
All right.
I'm going to drop video. Might be having an issue there. Adam and Cody, drop your video share real quick. Let's double check. Let's make sure that we are working it out on YouTube so that we can actually provide good analysis here for our halftime crew. What are you seeing, Cody?
On YouTube, I'm seeing still behind. Let's see here. Man. Yeah, there's definitely a delay. It looks like it's catching up. I don't know why it's doing this. I mean, I'm showing that my internet's good. I'm showing things look fine over here.
It's coming in slowly, so let's go ahead and get started here. And by the way, if you're out there in your halftime crew, welcome. And everybody say something in the chat. Say hello, happy Wednesday, whatever it is, hump day, I guess.
I'm seeing that we're still live, but it looks like we're
out a little bit better.
We're in the vortex here, seeing a screen.
Having an issue there. Yeah.
On YouTube. Let's see here. All right. Adam, I'll pull your video down real quick. All right.
And welcome. Welcome. Cody, I've got AMAT. Why don't you change the chart real quick? Go to the S&P.
All right. I got ES contract. How do you see there?
There we are. Okay. And the second I see that on YouTube, it'll let me know what the lag or the delay is. It might be too much snow in Utah. Okay. We had a snow day today here for sure. My daughters came down the stairs and they were fired up because they didn't have to go to school today.
I think we're frozen on YouTube. I think they can hear us, but it's just the screen share doesn't seem to be what's not working. And this is I'm going to send in a Zoom report.
And
we're going live. All right, we should be back up live again, guys. Let's see if the new stream has the delay the first one did.
And welcome out. If you are watching this right now, obviously we're having some technical issues with YouTube. Many of our halftime crew probably as savvy about this as we are. I think from source code to encoding, James had mentioned in the other one, it's about a 20-second lag in general. But we definitely were frozen when we first launched live there.
Looks like it's doing better this time.
Okay.
What I'm seeing.
So change it from the ES contract and move on to like crude oil real quick. Let me just double check. Before we go too far, I want to make sure we've got a good video stream here.
All right, I just switched to crude oil.
Yep, let's rock and roll. All right, so we've got Adam, we've got Tim, we've got Cody. Let's have some fun here today. Welcome out, halftime crew. We're going to work through our daily routine one step at a time. And maybe it was, you know what probably happened there, guys? I'm a believer in the deep state. They heard us talking about Trump, and they're like, we got to kick these guys off YouTube. We don't need conversations about the president right now. Everything's positive. It was a high approval rating for the speech, so we're going to leave that alone, right? Right before I started talking about my reaction to Trump, our video stalled. I wonder what that's all about, Adam.
Yeah, there's definitely a deep state theory out there anyways.
We got something going on. All right, guys, let's work through the market one step at a time. Markets are flat here today, and start with the S&P 500 here, Cody.
Let's do it.
Would. Give me a technical read on the S&P. Let's start with that.
So we're definitely above some of these old resistance levels that we saw in the past. Starting to get a little bit slowing momentum, that's pushing right up against the 200-day moving average, which right now is sitting at 27.43-ish. So if we get a break above that, I can definitely see it getting to 2,800. But we are 5 days, 6 days up, so we might see a little bit of a pullback. We get a pullback back into 2,700, or even let it sit at 2,700, make a type high base, then that's going to become more bullish. We were bullish this week, and I still see bullish momentum on the S&P.
Yeah, a couple of major S&P components that had earnings last night. Disney's probably the first one we need to take a look at. They came out and they squarely identified what their target is for 2019, and they had a pretty good earnings report, quite frankly. I put this on Twitter. You know, some stocks require a collar and others do not. And I asked Matt yesterday during our halftime report, would you collar Disney? And he, within 2 seconds, said no. You know, it's not a gapper. It's not that kind of company that you worry about. Red candle, as it's trying to break out, doesn't confirm technical strength necessarily, but no weakness here either. What was your reaction to this candle, Cody?
So why we're seeing this red candle is because we had the gap up after hours, markets are closed, and now it's kind of filling back down. I can see this because the earnings on Disney, from what I read, was positive. Even the earnings beat they had. So the gap up fill, I think is just people, you know, taking that gift, kind of cashing in different positions. I'm not too worried about this red candle. I can see Disney moving bullishly from here.
Yeah, you know, these gap fill type scenarios, when you have really big gaps, you've got the potential for a bigger fill. One of those is Spotify here today. Spotify had their earnings as well. It's one of my favorite companies. We're talking media companies. Obviously, Disney is a much, much bigger company than Spotify. But Spotify was in a little bit of a reversal pattern, gap down on some pretty good numbers. They said they're going to lose money in 2019, but they're a growth company. They IPO'd last year. That's par for the course, right?
That's why we just now barely have the 200. That's what that line is forming. That is the 200-day moving average that we just now got. So that kind of just shows you how new this stock is. Yeah. With good earnings, even though they, like you said, they said they were going to lose money. This thing could be a nice pullback that was needed. Give it a couple of days, see what it does from there. We could get an entry. I could see this being on a stock report down the road if we get a nice reversal signal.
100%. You know, it is a reversal type characteristic. You've got a V-shaped pattern with a compression of moving averages. Coach Frank talks about moving average soup, and this is the epitome of moving average soup. where you have a falling moving average and rising moving averages all coming together into a compression. Breakout up there at that pivot point would be very, very good for the long-term technicals on Spotify. One thing I really liked about the earnings report, they beat every analyst expectation, okay, on profit, on everything that happened. It gapped down just because the company said, hey, we are not going to profit this year. That's not our plan. We're going to reinvest everything into infrastructure, including they want to make a big push at podcasting. And I know Spotify is usually thought of as that streaming music service, but maybe they're going to do some more with podcasting stuff. I like the report, quite frankly, and I like that company. Get them on a watch list for sure.
I like them. Yep.
Take-Two as well. Earning stocks on the S&P.
Take-Two.
Now, here's my question. Have these gaming stocks lost connection with their audience? You've got some real problems in the gaming sector. EA, Take-Two, all of them. Activision as well, Blizzard. Adam, I don't know if you play any video games or not, or if you just trade or watch these companies. What was your reaction and what's your feel for these gaming stocks to begin with, Adam?
I wouldn't say I'm a big gamer I don't play the games per se, but I think there are a ton of people that do. There are a ton of people that really enjoy it. There's a lot of money to be made out there if you've got the right game at the right time. And one of the things I think I saw this morning was another big player coming into the gaming industry, which kind of put a damper on their excitement. I'm not even sure who that was off the top of my head, but
the big thing for Take-Two is they have that Grand Theft Auto series, and I know that their numbers were not as strong as they thought, even from Red Dead Redemption in the fourth quarter, and they didn't issue real strong guidance, And when you break a major support like that, 100, you gap below it. This is a very different gap than Spotify, in my opinion, because the one is gapping back into moving average soup and congestion, whereas this one is gapping below major levels of critical support and confirming the downtrend. You've got other players in the space. You've got Hasbro, you have Mattel, you have EA, you have Activision. But I think the big competitor, quite frankly, might be Fortnite, and that parent company and how they trade is obviously putting a lot of pressure on these gaming stocks. Coach Frank,
Fortnite,
the gamer.
Fortnite. I just want to say real quick. I think that the idea of it itself, because I don't game very often. So like when I was hearing about Fortnite and I finally got around to watching a friend of mine play it, it's pretty much a mixture of Minecraft, which had its big debut, however long ago, and Call of Duty or one of these other shooting games. Mm-hmm. So you took two of the most played and addicting type games and they just combined them into one, and that's what I see Fortnite is. And gamers out there may correct me if I'm wrong, but I've watched my friends do that. They go down there, they start hammering stuff, collecting materials, and they shoot at each other.
Yeah.
They combine two very popular games into one, and that's why it's doing so well. Why buy two games?
Well, and then the amount of revenue they make from the in-app purchases, because that's a free game, obviously. I mean, you buy Red Dead Redemption, I don't know what the cost is, 40, 50, 60 bucks, whatever it is. Fortnite's free, from what I understand. The gaming sector is complex here. There's no doubt about it. And obviously, investors and Wall Street does not like the reaction here. This is what we call a runaway gap, and generally, you have opportunities to trade these gaps. Let me ask both of you guys, do you ever play earnings gaps? Cody, you first, then Adam.
So I play earnings gaps based on if they gap with the pattern.
Mm-hmm.
So, for instance, if I see a bullish uptrend and they happen to gap down and the earnings were good, well, then I'm definitely going to play it. Because if they had good earnings and they gap down, maybe, off of forward guidance or something of that sort, I like that because now with the trend would also indicate that it's going to do a gap fill type situation. But rather than just, I'm not going out and buying call on it. I will do a spread on it. That way, when it does do that gap fill, I'm just picking up some of that theta along the way.
Mm-hmm. Yep. Yeah, it makes sense to me. Playing the volatility, picking up theta, using the gap as a way to create an entry is very common. By the way, it's not just Take Two here today. EA and Activision are both down huge.
Oh my God.
EA's down 13%, Activision's down 10%. Story of the day is the gaming stocks, and they are all taking it on the chin. Very, very bad gap on earnings here on EA. This one's not below support, though, so you have another trigger here. Different technical pattern where the one gap below the support level, this one is gapping into support. You'd probably trade that a little bit differently.
Yeah, this one, and this is also interesting because I had actually shorted this back here when it broke and closed below 80, and I was targeting 70. It kind of popped back on me, hit my stop loss, got me out. So I've been watching EA just because, let me zoom back out here, because it was on this very strong bearish downtrend. So the fact that it now had a miss on earnings as well makes me want to put this back on my watch list. I want to see if it's going to close again below 80. That was a major support that it's had for a while. And if it closes below 80 or even makes a low base here after the earnings, then this might be another shorting opportunity as well.
Mm-hmm. And by the way, Halftime Crew, welcome out one of our own and one of our loyal members. Adam Stewart is joining us here today. Adam, you are in Alabama, is that right?
That is correct. Right outside of Birmingham.
Right outside of Birmingham, Alabama. So everybody give him a warm welcome. Obviously EA gapping down here. Activision was on our list. I actually like the company on the fundamentals coming into the year. Go look at ATVI if you would real quick, Cody.
ATVI. Oh, geez. That's not pretty for Activision either.
Here's an example of when, and kind of let you guys peek behind the curtain a little bit here. Here's an example when we would potentially pull a stock off the Tackle 25. One new thing that we're doing every year from now on with the Tackle 25 is we're going to update the list on a quarter by quarter basis. You have fundamental problems with Activision. They have changed from the beginning of the year. At the beginning of the year, we had clarity. They also had a business relationship with that other gaming company where they had a licensing agreement that, and I'm trying to remember that game, and whatnot. They lost that. We're now gapping below support. The entire sector is rotating over. Not a good fundamental company at this point. You got weakness and you've got earnings here in a week. That is not a hold for sure.
No, definitely not.
Yeah.
I mean, if that wasn't an earnings, actually, it's got its own earnings coming up. That's not even its earnings. It got hit from the other sector's earnings.
Mm-hmm.
So, yeah, it's a stay away from me right here.
Definitely a stay la vie. As we go through the different companies, Micron's up big. A lot of the chip makers. Look at MU, if you would. Micron
with a nice break above that 40 level. But it's coming right back into where I had this previous line, about 42.5.
Mm-hmm. Yeah.
But that break of 40 is a significant break.
Yeah, and also AMAT. I know that we were talking in the pre-production show, Adam, and you actually play a lot of AMAT. Is that right?
I like to do some poor boy cover calls on it, yes.
Yeah, the poor boy cover call where you buy a leap option, sell a short-term call, Tackle 25 style. And we're going to get into that here in just a few minutes at the back end of our show. Here's a good stock breaking a pivot point. You got a falling MA about, an ATR or so away here. What is the earnings date on that, Cody?
Let's see. The earnings date on that is the 14th.
Mm-hmm.
So we're looking at, a week away, next Thursday, week and a day.
Yeah. Adam, being one of the stocks that's on your watch list that you do poor boy cover calls on, what's your read here on AMAT?
Right now, it looks like it's breaking out from this high base here. You do have some overhead resistance with that falling moving average there. With earnings coming up and it breaking out here, I definitely would look to collar this trade. The actual call that I have on it expires the day after earnings. So I'm kind of considering just go ahead and take the call off, maybe leave the top side open going into earnings, but then buying some protection on the downside just in case.
Yeah.
Since it is moving up and breaking away right now.
If you're going to do poor boy cover calls in general out there, one of the things you got to become very good at is learning how to read a risk graph and extrinsic value. And when these start to move to the upside, obviously there's rolling mechanics that are required. We'll break some of that down here in just a few minutes. I like the company. I like the candidate. I like what you're doing with it. Obviously, that earnings is going to throw a wrench into the short-term plans, but you just compensate for it and you do something about it. There's no doubt about it. All right, let's keep moving through the market here. Go show me the Dow Jones Industrial, if you would, Cody.
All right, Dow Jones. Look at that beauty.
Okay, Cody, trend, pattern, and where are support and resistance? Go through that checklist.
All right, the trend is, so it's starting to show a reversal, or I guess that would be the pattern there. So the trend's actually in the neutral range, neutral to bullish. The pattern is that we had this reversal type pattern break out of that high base. So we're showing a little bit of slowing momentum. And then your major support lines, well, one of them right here, you can see where you have the 100 and the 200 crossing right at that support level. So that's the first one right at that large 25,000 mark. And then the next one above that for resistance is going to be 26,000.
Mm-hmm. Yeah. And I actually, when I'm going through my analysis, I always look at the trend, the pattern, and the levels one step at a time as I'm developing bias. I talked to Matt about this one yesterday, and I'm going to get Adam's take on this. I think this one looks better than the S&P. Now, I know that it's very, very close, right? But the Dow shows leadership to me here and strength just because we're above the MAs. How much does the 200 MA mean to you, Adam, when you're doing your analysis?
Well, like you guys have said before, when the 200 is flat, you kind of give it less credence, really. And looking at this chart, it kind of just blew through it like it wasn't even there. So, I may use it as some support more than anything on a retracement. But other than that, that's about all I think about it right now.
Yeah, I think it's more important from a long-term perspective, the way I do it as well. Different traders.
That goes to the question of if it were to come back down, is it the support level or is it the moving average?
Well, they are catalyst, right? I mean, both of them definitely can be catalyst. One catalyst that pops up in the market is just momentum, though. And we have dojis here for a few days in a row. The volatility is lightening up. It feels like this market is slowing down and hesitating in front of resistance on the S&P at 2,800 and in front of resistance on the Dow at 26,000. The question is, are we going to continue to fade up while we test that, or are we going to a little bit of a pullback? Fed testimony tonight from Jerome Powell might impact that a little bit. The internals on the Dow are split, 15-15. Some of the better performers, United Health. Give me UNH if you would.
United Health. Wow, it's got a lot of resistance right there at 270.
Mm-hmm.
But we are starting to see this slow momentum, high base type pattern forming. So we get a break at 270.
For sure. Intel, INTC, and that makes sense with the chip makers and semiconductors kind of leading today.
Intel has been moving. So we tried to break out yesterday, try and break out today. Small candle. This is that's that major support level, or excuse me, resistance level at $50 is giving Intel a hard time here.
It is fighting it for sure. Those long tails on top of the candles tell me that we don't have a lot of carry through. But here's the good news, and it's relative strength. When the market's flat to down, S&P down 0.2%, the Dow is down 0.07, kind of flat doji. Intel is up almost 0.77%. So it is fighting that 50 level, and it really hasn't caught a momentum run here. But I do like it. 3M, United Tech, and Boeing. Quick peek at Boeing, if you would, because this is why I like the Dow personally a little bit better than the other indexes right now. I love this stock.
Oh, my God. Look at that.
You ever play Boeing, Adam?
It's a high dollar stock. So if I was going to do anything with it, I'd have to use one of Noah's broken wing butterfly strategies or something like that to be able to get it into my account.
Yeah, I get it. That's where option spreads and the leverage do open up some opportunities. Broken wing butterfly is an advanced system. It's not for everybody. But I did a podcast last fall with one of our team taco members, and that's all he trades, So there are some traders that love those creative type systems. And I would recommend a very, very strong recommendation here to everybody to take that course, System Development 101, because there are different strategies and different mechanics that you can fit into your own personal system for sure. Boeing showing me a lot of strength. Since the earnings, it's now up. I mean, we gapped out from 365 there. We're now up at 413. We nearly $50 move and breaking major long-term resistance, Cody.
Oh, yeah. This is almost, pushing 20%. If we get 60, 62, 72, that's 50% or 10% move. 20%, excuse me.
Some of the companies that are down here today: Dow, DuPont, Microsoft, Caterpillar, Nike, and Home Depot. Those consumer type companies, Nike, for example.
Nike's not much. It's $1.
Markets are flat. Yeah. That's actually still a very, very strong chart.
There were a couple that got hit. What was it? Spotify. We already talked about Spotify. Excuse me. I was going back to my notes from this morning with the ones that had big drops.
No, you're good, brother. Dow's pretty flat. There's not a lot of movement either direction. Give me the NASDAQ if you would, NQ.
So right away.
Same pattern.
Same pattern, but like you said, what stands out is that the Dow was above its moving averages, whereas the NASDAQ, it's not. That's the very first thing that I see. And I see that its big resistance level, 7,000, is right where it's fighting. So definitely less bullish on the NASDAQ than the Dow.
And as this market kind of churns over, you really have to look at the individual components in these indexes to understand which ones are pushing us one way or the other. We did break down all of the different fangs the other day. Look at Google if you would. Even from that post-earnings gap, we thought maybe, okay, it's going to flatten out. Down again today, now continuing to come back into a range. You're going to probably give that a neutral call at some point if it can't break and hold. It's mixed. It's a mixed market, complex market here today. What's your read on Google?
Google, I like you said, give it a neutral rating in sometime in the future. No, I put it about there now. If it can't continue this momentum to the upside and it just kind of starts facing sideways, then I don't know. It's hard to say that this thing is a reversal. I mean, look how choppy and messy this thing's been for a while.
Yeah. Break down Facebook, Apple, Amazon, and Netflix as well. Give me a quick read.
Run through all the things.
Up. Let's do it like this. You pull the chart up. Adam, you give me your instinctive read.
Facebook got a big gap up after earnings. Right now, I'd be waiting more for some consolidation and a little clearer entry point on Facebook for me.
I got to tell you guys, I got to share a moment with you right now. This is the beauty of living in a neighborhood like I do. It snowed at least 6 inches, and I have not got out to push my walks, and my neighbor is out with his snowblower doing it for me. That makes me happy.
You got to bring him some hot chocolate later.
I definitely will. I'm probably going to, I'll bring him a sandwich, a hot chocolate, bring him in to show him how to teach the stock market and all that kind of stuff as well. That's pretty cool. I'm going to have to go out and say thank you when we're done with our halftime report. Facebook is a gap out. Looks like it wants to carry momentum as well, Adam. I do like that. Apple Computer real quick. Apple Computer, and I have hesitation in this market today. We've been slightly bullish, but everything seems to be wanting to take a little bit of a break. Apple Computer, Doji, tight range candle, not a lot going on. Adam, to you, when you see a Doji, what does that mean about that underlying instrument?
There's definitely slowing momentum. It gives me it's kind of a in your red, yellow, and green light. A Doji is more of a yellow light for me. Just give me a heads up and tell me to pay attention. A little caution, maybe.
Cody, what about you?
I'm seeing this just as people are being cautious in the market. They're not sure what they want. They're like, okay, it's Apple, we should buy. But I mean, the market's flat. I see caution in this. I see the reversal. I see the potential opportunity, but I also don't see an entry right now.
Yeah.
So.
Yeah, I'd love to see it pull back, a couple of dollars here, after it pushed through the 170 mark there and just, maybe take a breather for a second and give a real good entry signal.
Well, one of the strategies we're going to talk about more today is the poor boy covered call, because I asked Adam in production, what's your favorite strategy? And that's what you said, Adam. This is actually a really good candidate for one, when you get an entry point.
For sure.
Yep.
And Apple's a great stock. And it's hard to think, that they're going anywhere anytime soon. So
yeah, I agree with that 100%. Amazon, if you would, real quick, Cody.
Amazon.
By price and volume, it is the number one company today in terms of movement, down 1%. $1,600 puts us squarely in the middle of a very, very tight compression range. This is one of those K trades, where if it broke 1,700 with some strength or 1,600 with some weakness and volume, you could trade that either direction. That's my read on that one. Netflix.
This is a textbook K trade.
Absolutely.
Oh, that's
bi-directional right there for sure. Could even be a candidate for like a debit condor, something like that.
Yeah.
Netflix wants it.
Oh, that just stands out really easy right there. 360 cup and handle forming.
The only tricky thing about that is, and Breakout Frank, I'd want to get your take on this maybe in our meeting on Friday, is probably going to do something before then. But if you break 360, you got another resistance point right in front of us, right? And is that 20 points enough to justify risk you got to take? It's got an ATR of about 11. You'd be right at 2-to-1 if you took a 1 ATR stop loss off that breakout point. There's a signal there. It's very clear. You had a V-shaped reversal, and now you got a cup and handle developing. Adam, what's your read on Netflix?
Netflix is a very clear entry point for me, being a high dollar stock, kind of like what you said. Is it worth the risk? I would be looking at a broken wing butterfly here if I was going to enter into this to get some delta exposure there and be able to get it on the cheap, basically.
Yeah, I like it. Guys, we're here. We're joined by Cody and myself, Coach Tim, and Adam, one of our halftime crew. We are at the halftime point of our halftime report, and welcome out as always. We got about 60 people here live. Good to see you guys. Team Tackle, pop something in the chat. If you're watching this later, make sure you put a comment in the bottom. It does help us with our SEO, and we live in a world where we got to get the voice out right there. Give us a quick like as well, and let's keep working through the market. RUT or RTY, either one here, Cody.
I always like using the future markets. It gets the gaps down, and then I can watch it after hours.
I think it's a very, very good point. Break that down for everybody out there, because I get the question every now and then, why are you looking at the futures charts? I don't trade futures, but even if you don't trade them, I prefer them when I'm analyzing for that purpose. Explain that, Cody.
So, yeah, it's just kind of like I just said. So if I were to look at the RUT instead of RTY, RUT, there we go. You can kind of see, more dramatic movements. We'll get gaps at various times, and you don't really see intraday movement. Or it's when the market's closed and you can't trade it, can't adjust, you can't do anything of that sort. Doesn't look like my computer wants to let us bring intraday. So, you want to be able to know what's happening and why. Mm-hmm. So when it comes to aftermarket, if I switch back to the futures, you notice there is none of that gray area, and we're just moving with the market. We're not getting any of those dead spots where this is untradeable, except on Saturdays. So I love this, the fact that I can analyze all the patterns as they're setting up, whether the market's open, the market's closed. I can prepare myself by using the futures contracts.
Mm-hmm. Yeah, absolutely. Very, very good. The Russell 2000 here has had the most movement in terms of price action volatility. That was when the market was bearish, and when it's recovering here, same pattern across stocks in most markets. Resistance up here at 1550. There's another one at that 1600 mark as well. We're kind of in the middle. Might be a good time for more of those cash flow condors as we move into a neutral volatility range. That's the perfect time for that type of system. Give me the $DXY if you would, Cody. Let's move through the currency and commodity markets.
Oh, the dollar. I'm so glad Powell's speaking again, too. Let's just mess with the dollar even more.
Yeah, it's neutral.
So, yeah, this thing's nothing but neutral. It had its channel there that you can see that I've drawn. It's now back into it. It came down. We end up getting this W pattern right back up into it. This thing's almost I mean, it really is untradeable, just in the simple fact of there's not neutral based strategies on the dollar unless you're going, long the dollar in one particular currency and short in another. But this is just, it's been whipsawing so often that you can't really touch this until we get a pattern other than neutral.
Mm-hmm. Adam, you ever trade any Forex?
I'm not a big currency guy right now. I do go back and watch the Forex reports every week, and that's one of my goals for this year is to just study more about the Forex market, learn more about it, learn what it is, what it does, and how to do it.
Mm-hmm. Yeah. One great thing about currency is that it is a 24-hour day market. When you trade those Forex pairs, you have extreme leverage. It's a good day trading product. I don't generally recommend it for beginners. I prefer that people get some of the other systems down and learn first, before you get into Forex. But Cody, you trade a lot of Forex.
Yes. I personally, I love Forex. When I was saying a second ago, dollars untradeable. Little bit of annoyance there on the simple fact that I'm not getting clear signals. And in your accounts, I actually have a different brokerage account that I do all my Forex in. Versus, where I do my futures or options trading. And while it's not setting up, while I'm not getting any clear signals, that money's just sitting there doing nothing. And that just bothers me. The fact that my money's not invested right now in some form or fashion.
Mm-hmm.
So, but sometimes you just have to do that. You don't have to trade every day. We wait for the signals. As far as the different ones, I've been keeping my eye on the New Zealand dollar because that's Japanese yen. The New Zealand dollar, here we go, has actually been one of the more clear. But today, of course, as it's starting to get another signal, possibly get into it, we have this giant drop, and that's based off of news in the on the New Zealand dollar, which is also another reason I couldn't trade it. Because even though there was no U.S. news this week, we had 3 other countries announcing their GDPs and things of that sort. And it's just like a little fed up with Forex right now.
Well,
just because I can't trade it.
You can have inconsistency in the market. It is thought of as one of the most pure technical markets, but also very news driven. So you're going to get so many different economic reports and data from around the globe that can impact the Forex market. With all this speeches and testimony from Fed Chair Powell and everything that's going on there, obviously you have concern with the volatility as well. Dollar's neutral until we see otherwise. These Forex pairs will break one way or the other once the dollar does. What's interesting about the dollar today is the dollar's up into a neutral range, but also crude oil's up. Okay. So we are decoupling just for one day, at least, on that relationship. I love this potential breakout and run here in the V-shaped recovery the market is in. Crude oil has a lot of upside if we can break this 55 area with strength. Commodity report this weekend. I'm sure we will deep dive into it. Crude light up about 1%. Adam, give me a read on this one. How would you read that support, resistance, trend, the V-shaped recovery?
Well, as far as crude light goes, I know Matt and you guys have all said 55 is the number. So that's what I would be looking at without a shadow of a doubt in my mind for a breakout and be able to play crude.
Yeah, they had an EIA report, comes out every Wednesday. I was looking at it. They rose, inventory rose. In fact, I do think supply is going to continue to rise. It rose 1.2 million barrels, but they thought it was going to rise about 2 million barrels. The EIA has had a hard time with those reports in the last few months. There's no doubt.
U.S. production. Counting is hard. Those those reports, they go through and they count those barrels, and somehow they seem to miss a couple million here, a couple million there. Counting's hard.
Yeah, it sure is. Math is hard and projections are hard. That is true, actually. Move on to the gold market, if you would. All the energies are kind of flashing up here today. Let's talk metals. I love this pullback.
Oh, me too. And I will disagree with Matt. Matt was saying it's not a pullback yet. No, it's looking like a pullback. Pullback, flag, base. It's looking bullish. It's
developing into a pullback. I think what his point was, he's such an analytical and definitional type trader.
He wants it to come all the way back down here. That's what he wants.
And when it's only 2 red candles and you don't have a Fibonacci retracement amount that's going to bring him into his little sweet spot.
All right, hang on. Let's see. Let's get the fib for Matt. Matt, if you're watching after the fact, there's your fib.
We're getting there. We're getting there. The fact of the matter is gold is bullish, and it's been moving bullish for some time. GLD is an ETF that you can participate in the gold market. And one of the things that I was talking to Adam about today, it's a great poor boys cover call. You buy the leap option, you sell call options against it to take advantage of the slight bullish behavior. We're going to price this one out. Adam, do you play the metals market as well?
Only through the ETFs.
Yeah, the ETFs. I think that's how most people participate in them, GLD, SLV, those types. And we're going to break down GLD here a little bit later. Go on to SLV if you would real quick, Cody.
Oh, SLV. Again, I got to have it looking futures, but
you can even feel the charts. They're just a little bit different. Gold is a more kind of methodical pullback developing into a clear catalyst zone. SLV and SI are just subtly, ever so subtly different in that regard. Still kind of a nice pullback here, Cody.
Yeah, I definitely like this one. I mean, this one is actually kind of to that level that it needed to get to before. So this looks more like a fib, but it does have a different feel to it, like you were saying.
Mm-hmm.
I wish we had a slower or a smaller candle coming into this resistance. Maybe we'll get one tomorrow. And if we get that, then I'll be looking to possibly re-enter this trade.
Gaming stocks, volatility in the commodity space, crude oil with the inventories. It's pretty much where the market is today, and Google continuing to fade. The chip makers showing us a lot of strength, which is where that AMAT and the Avgo and the Texas. Bring up AVGO if you would real quick.
AVGO.
Broadcom.
Vago.
Shows you the nature of the strength.
Look at that. I like that.
Hitting an all-time high here, I believe. Well, it's breaking out of the 52-week high. I know that.
Not quite an all-time high.
Mm-hmm.
But, I mean, if we break that all-time high, then, yeah, we're off to the races. Yep. 300 is probably going to be the first easy target.
Very, very good. All right, guys, let's move on to our feature here today. And Wednesday is our guest day where we bring somebody in from anywhere, in the markets. It happens to be one of our loyal and best members, Team Tackle, Adam Stewart here. And Adam, you love poor boy covered calls. And so I asked Cody to bring up the spreadsheet, and we're going to build a few poor boy covered calls. One of your favorite candidates is Applied Materials, and you like that one because of the reversal and the strength it's shown recently. I really like Apple. I like Google. I like some of the bigger names, but talk about what you like about the poor boy covered call system.
Well, poor boy covered call, excuse me, I have a real estate background. And so the idea of rental properties and monthly cash flows from rent coming in really appeals to me. So covered calls appeal to me. I understand them. The poor boy covered call is basically the same thing, but it allows you to use a little bit more leverage on the covered call, especially in some higher priced stocks.
Mm-hmm. Yeah. And, one way that you can research the poor boy covered call is very simple. Use the Tackle Theta research spreadsheet. And Cody, if you would bring that spreadsheet up, and we'd picked a couple of them. Adam loves AMAT. We could talk about that one. We could do gold. And I think a really good candidate would be like a Disney as well. GLD there. And was there one more we picked, or were those three?
You had Apple as well.
Apple Computer. Yeah.
Apple. Got to have Apple.
Now, this is the covered call sheet. Now, inside the Tackle Theta spreadsheet, what I would tell everybody out there is if you're building the time spread as a one-off time spread, there's a tab for time spreads, but there's a different reason why we use that one instead of this one. I prefer building poor boy covered calls here in the covered call sheet, but instead of the price, identifying the price of the stock, I would just put in the price of the leap option, okay? And that way we can compare the ROIs. Why don't we pick one of these here, Cody, and build it out and kind of walk us through it step by step?
What are your thoughts on which ones to do? I mean, we just had Disney earnings, Apple, in that reversal, Disney. Looking for a signal. Disney, we can do Disney. All
Disney,
right.
Post-volatility earnings, it's gap filled back. I think Disney would be a good candidate.
All right, so I'm going to put in two Disneys. And the reason I'm going to do this is so that we can do one straight covered call and one poor boy. So can one of y'all call these out as we go, and I'll type them in here?
Mm-hmm. Now, let me quiz. This will kind of be a way for me to test Adam here a little bit. Adam, if you were looking at the option chain, and I've got one up on my side as well, I'm looking at Disney options. The first step is to buy a long-term option. Okay. So in the chat, if you're here and you're watching a halftime report, put in step 1, buy a long-term option. So the poor boy cover call is a combination of 2 different options together, a long-term option that you own and a short-term option that you sell. That's why we call it that. Adam, what expiration would you use here?
I would definitely have to go out to at least June or July at a bare minimum.
Mm-hmm.
Maybe July.
I think either one, January would be in play as well. I would be open to a July. And really whatever that rule is should be built into your playbook. I've seen playbooks that are very, very good that say 4 months or more. Okay. But I have more conservative, longer term traders that also do it like 6 or 8 months or more. Whatever that mechanic is should be worked on with a coach or mentor. Make sure that you have that design. I'm cool with July. I got no problem with July. That's 163 days. It's beyond the time decay expectation. It fits with a short-term trading model. I'm okay with that. We could look at the July. Now, if we buy here, once you choose an expiration, you now have to choose a strike price. Cody, the delta we tend to want to buy when we buy long-term options is 60. The poor boy covered call, you can't even go higher delta here. The higher
I'd like to go higher delta myself.
The more you spend. Mm-hmm. Yeah, talk about the difference between the 80 and the 60 delta here.
And see, the 80 delta is the one that I would want to go for. And as we're looking at this, I mean, the 60 delta, you can do 58, it's close to 60, you can do 68. But you look at this at 110 mark, and then we'd be selling close to 40, so 45. So we're talking this one here, sell that one. Like, we're selling and buying pretty close. Obviously, we're going to be selling one shorter time frame, but I'd rather have that in the muddy ability to sell this deeper, so that when I'm selling outside, it's more of a spread on the theta.
Mm-hmm.
So what I want with the delta is not only the direction but also the probability. I want to make sure that Disney's going to stay above 80, not 80, excuse me, 95, 50 at that 80 delta.
Here's the way I think about it in my own personal trading. If I know I'm going to hold it for a while and try to roll against it quite a bit, I'm going to go a little bit higher delta. Okay. Because I want to have less extrinsic value on the option I own, a better option, like you're talking about, Cody, and it gives me more flexibility in the way I roll. If I know it was going to be a one-off, I'll probably go to the 60 delta. Adam, which one of these deltas would you pick here?
My rule is 80 or more.
Okay.
And then I would base it on the open interest from there and the bid-ask spreads to see which one I think I can get filled on the easiest.
Yeah. So what
we would put point there, Adam, we have zero open interest on that 97.5. So that's probably not going to fill. It's a good point.
No, you would fill. You got a 45-cent bid-ask spread difference here, if that, and you're talking about Disney, which is $200 billion company.
It's Disney.
You would get a fill. I understand the concern with some, and you want to look at it for sure, but that zero OI is more of a reflection of just being the 97.5 strike. I bet institutions were more targeting the 100 or the 95. People are human after all. They usually do things that make sense to their brain. But I would be willing to do it either way. The cost of that one is the midpoint between the bid and the ask, 16.75, right? So now in the spreadsheet code.
Go into that.
Mm-hmm.
Yep. So go ahead and call us off. Actually, let's do the stock first.
Sure.
Call the stock price for me.
Stock is 111.70.
Okay.
And the call contract would be you can do both at the same time, 16.75. Okay. So the first line is the covered call. The second line is if we did the poor boys covered call. All right, guys. Now the month is the month you sell in a covered call system. Okay. So let's go in and select which one we would sell because they will be the same.
Adam, which one here would you want to sell?
I'm going to be going at least 30 days out. I try not to get into the weeklies as much as I stay with the monthly options. So I would probably go in March 15.
Mm-hmm.
I agree with that one.
Mm-hmm.
It's just a personal preference for if I need to roll out of it. It just seems to be more liquidity in the monthlies.
Anywhere between 30 and 45 days does work. You can always look at that weekly option and see if they are liquid, if you've got that kind of thing. Open up the 8-day or the 8 March 19 here. OI is about 20 to 100. You even have 500 open interest on the 28 Delta. If we did the 8 March 19, we'd sell the 42 Delta right there based on our rules.
Mm-hmm.
And if we go out to the monthly, that's about 163 credit. Those are pretty liquid. You could do that. The monthly is going to put you. See, I don't like the Delta here.
Well, that's what I was going to say.
Delta's really far out.
Opened up the March 15. That only the 115 strike there has a 30, or the Delta's just not there. So that would make me go back to March 8th.
Very, very good. I agree with that.
I like
logic. Yeah. So let's build that March 8. It's a 42 Delta, 30 DTE.
Okay. March.
Mm.
30 days expiration.
Mm-hmm.
Call sold. What's
113 strike? 113 strike.
113 on each of those. Delta, you said was 0.42.
Mm-hmm.
And what is our credit on that one? $1.65.
Well, you got a 161 bid, 168 ask. The midpoint's going to put you about 165. Yeah. Penny or so here or there. Now, this is where the numbers do get thrown off a little bit. That max profit on the poor boy line, that column right there, that's not accurate. But what I do like about this screen is that you can compare the credit ROI. See, if you just do Disney as a covered call, it's a 1.5% ROI. So step one was to buy the long-term option. Step two is to sell the short-term option. Write that in the chat here, somebody. Okay. Step two is to sell the short-term option. Now, as we're looking at these numbers here, the major difference is cost. Poor boy covered call, you're going to be able to spend less money. That's not the only difference because it does impact the option Greeks as well. I do believe that it is a very, very important skill set to be able to manage short call options to even consider a poor boy's covered call. First of all, it's true of covered calls as well, because if you can't manage it, they can get out of control pretty quickly. Talk about that a little bit here, Adam, because we know the ROIs are going to be bigger for Disney, but you now have a little bit difference in the management against a covered call.
Well, for sure. The management of it for me is key. You have to check it, and if you feel like you're going to blow out the top, you need to be able to roll the call up and out. When you're coming up on big earnings or big announcements or anything like that, you need to be able to collar it.
Mm-hmm. Yep, I agree with that. Cody, go show me what the picture looks like on a risk graph analyze tab. And
I was actually just building that as y'all were talking over there.
Intuition, that's my man. I love.
There we go. All right, so right away I'm just buying the call like we just did over there, and now I'll come out here, and of course I am left clicking because that's the way you do it.
That's right.
And wait, that's not in the analyze tab. That's in the actual tab. That's not what we want to do. Simulate trades. There we go. Sell. And buy. All right, so what the risk graph on that one looks like, and we pop this up. Let's say we get that fill at 165, lock that price in there. Looking at the risk graph, kind of looks like a cover call.
Mm-hmm.
But if we were to zoom in a little bit on this, you'll notice that it's not a full distinct level like a cover call is, and that's because of the theta difference between the long call and the short call. And actually, you go out far enough, you see how you actually kind of get a crossover on the simple day. But of course, the blue line is the expiration.
Mm-hmm.
So we do have to look at this. We do have to manage as far as the theta on each of them.
Mm-hmm.
Obviously, we're never going to hold this long call till expiration. We would look to sell the long call and buy it further out of the money and continue doing that over time to keep this graph looking like this and not where we're losing too much on our theta.
Open up the Add Simulated Trades button and actually build in 100 shares of stock so we can compare it. And go up to the asking price on the stock.
Yep.
And then open up the price slices as well with the risk profile picture.
Oh, you would love those price slices.
And dump out of the 10 up and down. So you only have one at the 0. I just want to look at one line. Keep it simple. Yeah. So right click and delete on them. So if you
Just
find
delete them. Yep.
Yeah. Now uncheck
There we go.
Mm-hmm. So essentially, if you do this as a covered call, you get 7, or what is that theta, Cody? 3.5?
The theta on, where are we looking at right here? 3.5.
You get 3.5 theta, okay? But you also have to put more money out there. You have to buy the stock for $111 a share. If you pay full price on that, that's $11,000, right? Now, if you change it, so it's 3.5 theta on an $11,000 position, okay? If you do the poor boy cover call, now go ahead and flip that.
Okay.
Your theta gets reduced down to half. Now, Adam, I'm going to quiz you. Why is that?
Ugh. I don't know there.
Now, what did the one thing we do change? Does the stock have theta?
The stock doesn't depreciate.
That's
in
right.
time value. Yeah.
So, and this is where I'm talking about the complexity does change a little bit.
Yeah.
By adding the long-term option, even though you still have a positive cash flow trade, you are reducing your net theta, but your theta per dollar goes up, right? Because the net cost has now come down to about $1,500 instead of $11,000. And so you're trading with leverage to generate cash flow. Okay. In the chat, type in leveraged cash flow. Leveraged cash flow. I love this strategy, guys. It's an advanced one, by the way.
It is. Yeah. It's a lot of fun.
All right. That's it for today, by the way. Adam, I do want to ask you one quick question here. Give some advice out there to everybody who's team tackle, halftime crew. You know, you're a student, you're going through the process, you're still learning as you go, building this business out. What's one bit of advice you'd give anybody who's brand new?
Show up.
Mm-hmm.
Show up every day. And practice. One of the favorite quotes I have from Bruce Lee was that and I probably won't say the quote exactly right, but he said he never feared a man who practiced 10,000 kicks one time, but he had a lot of fear for a man who practiced one kick 10,000 times. So practice what you know, then move on to the next thing, but show up every day.
You know, it's really interesting you say that. I think Beth Salamanca recently, we had a blog feature. I don't know if you had a chance to read that, Adam, did you?
Not yet.
Yeah, I would check that out. It's incredible. Beth is one of my students. I mentor her one-on-one, and she mentioned that you got to put your butt in the seat, you know, and I remember that. You got to just show up. You have to have that chair time where you're in front of the computer, you're watching the market, you're doing this analysis every single day. We call it a daily routine for a reason. Cody, real good job today. Great work out there. Adam, great to have you. I'm sure we're going to have you back. And I'm sure we're going to get a meme or two on this on Twitter is what my guess is.
There has to be a meme. If I had enough time this morning, I was going to Photoshop Adam sitting on the Game of Thrones chair and say the meme master.
The meme. Yeah.
I like it.
Alabama is coming, right?
You have to talk a little slower for us, but we definitely are better at football than most. So,
hey, man, Auburn, Alabama is one of the great games in any sport of all time for competition. I know you're an Auburn man, right?
For sure.
Go Tigers. Go Cam Newton. I love that guy, by the way. He's one of my favorite athletes. I don't know if you're a big fan or not.
I got a lot of love for Cam Newton. He's a big showman, but his heart, I believe, is in the right place, and he tries to do a lot of good things for folks.
100%.
Such a nice way to call him a showman.
Yeah. All right. All right. All right. Guys, we are out. We'll see you back here tomorrow where we are going to have Theta Thursday. We'll go through another cash flow strategy and technique, and then just keep bringing the daily routine every day. Halftime crew, we're out. We'll see you tomorrow.
All right, guys.